In this video, we are going to be looking into one of my BTC trading strategies that you can actually use to maximize profits when you are trading BTC, gold, crude oil, or maybe some kind of volatile market. Guys, if you're new to this channel, make sure you subscribe. And if you want to get updates, market updates, especially on BTC, right? You want to subscribe to this channel because this is your best sure or surest plug, right? So let's head over to the charts. Let me just give you a sketch of what my strategy actually looks like. Now, I actually have two strategies that I normally use in trading BTC, but this particular one is the most the simplest one that you can actually use as well. By the way, if you want to get more detailed information on this strategy, because there are a whole lot of things that has to do with coming up with this strategy, it has to do with institutional blocks, it has to do with fair value gaps, market structure, liquidity. So I have a complete course on that. So check the link below this video, then you can also gain access to that course. And you can also, if you get the course, you get a 1 month free subscription to my VIP community, and also you get a 1 month free mentorship, all right, on how to use that strategy. So let's just head over to the video. So basically, first thing you want to do is that you want to identify a recent breakout structure or a recent change of character. All right. So in this case, for example, let's assume that the market is trending upwards. All right. So here we have a breakout structure. Here we have a breakout structure. Here we have a breakout structure over here. Now, what you want to look at for in this particular move over here is you want to look out for like order blocks or demand zone, whatever you call it. It doesn't really matter. All right. The most important thing is that you know that this is the move you are focused on. You want to take advantage of the continuation of this bullish trend, and this is the bullish scenario of my strategy. So let's say, for example, we have an order block over here, which it is where we are most likely to have an order block, right? So let's say this is the order block. Now, another thing you want to look out for in this particular movement is that you want to look out for inducement or a kind of ranging market. All right, you want to see markets range within, it might not actually be equal, but you just want to see some kind of ranging behavior in this particular zone over here. Now, once you see this, you are not doing anything yet. Now, what I mean by that is that whatever is happening in this area over here, it is none of your business. What you are most interested in is price coming down close to your order block, taking out this liquidity over here, those that have been buying and selling over here, then giving you a setup somewhere around this area. So you want to wait for what I call your call to action. Now, call to action in trading simply means that particular thing that once you see it on the charts, right? Once you see it on chart, once it happens on a chart, you now start looking for a setup. So you don't just start looking, am I going to buy or sell when the market is still in this particular area? No, you want a particular thing that will happen on the charts that okay, the market will now gain your attention for you to start looking for a setup. So my call to action when I'm trading is when price takes out liquidity and goes into the discount zone. Now, if you want to get the discount zone, you can do your Fibonacci. You can use your Fibonacci for that, or you can just use this particular Gantt box over here and just measure out 50% of this particular movement over here. Now, if you watch out, you see that you need price to come into this area before you start looking for a setup, because number one, you want a very clean and a very good risk to reward. You don't want to be buying here, then price starts retracing here, taking you into drum. All right, then maybe you've eventually hitting your stop loss. You don't want that. You want price to start moving from the exact points that you buy. All right, it's not always going to happen, but if you are able to get a setup inside the discount zone, it will give you better risk to reward and lesser drawdown. So my call to action most times is when I see price come down, taps into this 50%, all right, or maybe even go deeper. I actually have a Fibonacci level, specific Fibonacci level, which I call the golden zone, that I actually shared in my course. So if you get that course, you have more details on how I use Fibonacci to filter out, my zones that I look for. I used to look as for setup. Now, and one good thing about this strategy is that you can use it whether you are day trading, scalping, or you are swing trading. All you need to just for you to just increase the time frames. All right, it works. Any market that has a market structure, it works for it. All right. So, but it will work better for pairs that have, that can move aggressively, then retrace a bit, then continue that movement because you are leveraging on the trend of the market. All right. So, in this case, once price taps into this area, what I normally do actually before price taps into this area is that I want to set an alert. All right, in the 50% of that particular move over there. So once I set an alert, as long as this alert does not trigger, I am not doing anything. Even if price continues to go upwards, let's say for example, even if price continues to go upwards, all right, all I have to do is just to extend. When I come to the chart and I see that okay, price did not come down but started going upward, I just need to extend my Gann tool, then also extend my alert. Then this becomes my 50% area that I am waiting for price to come down to. So um, once price comes down into this area, triggers my alert, that is when I now come to sit down on the chart and start. I go down to the smaller time frame. Like in this case, this is a 4 hour time frame. So you might want to go down to a 15 minutes time frame or 15 time frame or 10-minute time frame, any entry time frame that is comfortable with you, all right, if you are day trading. All right. So once you go down to a lower time frame, what you want to see on that lower time frame is that you want to see price come down, take out liquidity over here, tap into this other block or maybe a fair value gap over here, then go down, gives you something like this. All right, this is your entry. Now, this over here is when price gives you a change of character or market structure shifts, or if you use candlestick pattern, you can look for bullish engulfing, or if you use patterns, you can look for double bottom. Then you can now take a trade. Now, you either wait for a retracement, but most time I don't wait for a retracement. Once that's giving me this, I just enter over here. As long as my stop loss is placed below this area or below this area, depending on how much I want to risk in that particular trade, then my TP, especially TP1, should always be this particular high over here. Now you can do 1:3, which is the minimum I always recommend. All right, then you can put your TP2 at this level or TP1 at this level. Now once TP1 is hit, then you can now move your stop loss to your entry. So that's basically how um, I trade BTC. Now there are other systems I actually use. Actually, two strategy I use, but this is the one that's that gets printed on the chart most often. Like I said, you can use it in any time frame. So if you love this video, guys, and if you want to try this strategy out trading BTC, it works for BTC and gold, it works for crude oil, it works for GBUSD, then let me know in the comment section, guys, and do not forget to subscribe. And also, guys, if you want more details about this particular trading strategy, I have a complete course that you can get. All right, just send me a DM through the link below this video and you gain access to that particular course. Guys, take care and do have a lovely trading week ahead. Take care.